everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and crypto market outlook, where we take a look at our favorite markets and formulate an attack plan for tomorrow's trading. Tomorrow's trading being the 6th of September, already pushing into September. Hopefully everyone had a great holiday weekend over the Labor Day holiday and were able to hang out with some family and just kind of get rested up and spend some time away from the market. I know it can be kind of hard considering how much of an addiction this can be, but it's good to get a break in every once in a while. Now, of course, lots of stuff going on. You know, we're starting off with a long holiday weekend. We're coming back, and a lot of times the markets are really slow when we have that kind of situation. Today wasn't that case. We had some pretty good movement. A lot of movement didn't happen until in the afternoon, lunchtime afternoon session. But for the most part, we're starting off the week with a bang, and I can definitely hope for more of that kind of price action as we continue. Now, of course, before we jump on in, as always, make sure to swing on over to slingshotfutures.com. Scroll down and click on the Join the Daily Outlook newsletter. That's going to let you sign your email up on our email list so you'll be notified every time one of these videos comes out. Along with that, in the newsletter, we talk about all kinds of different stuff, obviously cryptocurrencies and futures, but along with that, options, stocks, and pretty much anything else that moves, along with any big announcements. So make sure to have your name on that list so you never miss out on anything again. If you haven't done so already, click on the live Trader and subscription trial info. That's going to let you sign up for a 3-day trial so you can hang out with us for a couple days in the live trade room. You'll be able to see our screens, see the trades that we're looking at, basically just kind of see what it's like to be a member for a couple days, less all the members info, of course. But it's a great way to see if it fits what you're looking for. It's a great way to hang out with us for a couple days, see how we do things, see how things operate, and just overall a really great experience. So make sure to do it if you haven't done so already. Along with that, if you do enjoy the live trading, you can subscribe for a weekly or monthly subscription. And of course, if you join as a full-fledged VIP member, which has plenty of different discounts depending on the tier, don't forget to check those out, you get the live trade room as part of the package. Now, taking a look overall at the movement today, obviously, we had quite a bit of movement. The euro, not so much, though. Out of all of the markets, the euro is probably the most lackluster. We had a little bit of back and forth and really didn't accomplish a whole lot. We opened up right here. We had a push down to a new low, up to a new high, down to a new low, up to a new high. The anticipation is that this serpentines its way back down to a new low. The way that we're forming here, I mean, the daily candle is going to look not really that great. We're going to have a body kind of hanging out in the middle here and a bunch of wick on the bottom and a bunch of wick on the top. Not a very good daily candle by any means. For the most part, again, the anticipation is that we cycle lower to kind of complete that movement, that range bounce back and forth that we're seeing. But there are a couple things that are, you know, potentially a little bit of an issue with the cycle down. First of all, if we zoom out here, we can see that we're just kind of stuck in the range, and we really haven't broken out of that this big movement back on the 1st of September. We're still stuck inside of there. We haven't left that area. So as long as we're stuck inside there, chances are we're just going to ping pong back inside around here for the better part of, you know, the next day even maybe, unless we can start really getting some movement. Not to mention the fact that we have a rising channel support kind of grinding through price a little bit here. There's a lot of issues with where we are right now. Now, obviously, if you go further back, we are in a bullish move, albeit quite range bound, but we do have more up than down. So the buyers have the emphasis. It's just a matter of whether or not they want to show up to the party tomorrow or if they want to show up to the party in a month from now. We're just not getting that conviction being stuck inside of this overall larger range. So because of that, we're looking to play it as a range, but with a very slight emphasis on buying low. We have a level of support at 19,125, the major level of support below that at 18,915, and we do also have a level of resistance above at 19,430. And again, really just looking to play both sides of it. Buy low, sell high, buy low, sell high, and just keep going from there. Overall, everything is looking pretty solid. It's just a matter of, again, we're right in the middle of everything right now, and we're not in an optimal place. We want to see the market come down to an area of interest where we can then look to scoop price up and continue the rally either up or the descent back down. So right now, because we're in the middle, not really a whole lot we can do on the euro. On gold, we started off a little bit sideways and range bound. We opened up here. We had a new low, new high, new low, new high. We're probably going to eventually cycle down to a new low. But we did break out of this pretty aggressively higher. We have a nice, beautiful bullish ascending wedge grinding its way up. And the market just really isn't letting the sellers accomplish much at all. The one thing that we do have, and where this big level of support at 42.9 comes from, is this ascending wedge up attempted to break out higher. And usually usually when they hit the gas pedal right at the end of a wedge or the end of a range or an extended trend that's been going on for a while, it's usually more a sign of exhaustion. That's like the last throws before they just give it up. And that's kind of what we're seeing right now. We had the blow off through the highs, we're getting the blow off through the lows, and the anticipation is that they want to come back to an earlier level of support. They obviously no longer want to buy up here, otherwise it would have kept going. So we're looking for them to want to buy at value. And right now, value begins at 42.9, all the way down to really yesterday's levels at 39.4. So this zone, although it is very large, is kind of the area of interest that we're looking for right now for potential bullishness right back up again to make an attempt to hit those highs again. Now, I say make an attempt because if they do hit the highs again, very likely it's not going to be with a whole lot of juice behind it anymore. They kind of spent all that already. So I'm kind of looking at this with a slight wedge across the highs, looking to buy into that pullback to shove the market back up towards at least around 47.5. If we can get further movement to the upside, 49, and then of course to the highs for a wedge test. Still definitely buyers, but looking to buy at a slightly better price here on gold before we go jumping in too aggressively. Over on crude oil, good runaway day today. Crude oil definitely hit the another market that hit the gas pedal, but they didn't stop. They just kept hitting it over and over and over again to the point where the market was just so far up that any pullback right now, buyers are just going to be buying into. We had a big bull breakout here. Buyers snatched it up. We had another breakout here. Buyers snatched it up. Another breakout here. Buyers picked it up. Big breakout here. Buyers picked it up. You're getting the idea here. So really what we're looking for is a deeper pullback. We have a 3-push wedge top that kind of rounded off the highs. We're getting a grind back down into major support, and that major support's at 48.54 down to around 48.15. Another very large zone inside of here. But this whole area is likely to be just kind of packed full of buyers that are going to be accumulating this low. It makes a lot of sense because they really haven't had a chance to buy a pullback all morning. The most they pulled back was maybe 1 or 2 candles closing underneath the moving average, and that was one time at 8 o'clock. So we really didn't get much of a pullback until we started pushing into the lunchtime session, and by then a lot of traders might not even be in-house anymore. They're looking to buy tomorrow. So we may have an overnight session kind of dip lower around, again, 48.54 is the big area, but this is a zone down to around 48.15 for accumulation buyers to be picking up to shove the market back up towards the highs once again. I think the most optimal place would honestly be 48.15. I would love a bounce off of 48.15, not to mention last week's high support at 48.20. Right around that area, I think it looks really good for a potential bounce there rather than too early, but it all depends on what the market wants to do. A lot of times when we have a blow-off move like that where it just keeps going and going, it usually keeps doing it in the overnight as well. So fingers crossed we get a deeper pullback here, but don't be surprised if it doesn't happen. And then on the S&P, we had a just monster breakaway at the downside, and they couldn't hang on to it. They just could not hang on to that breakout move to the downside. We had a very sturdy range for the better part of the morning, all the way until about 11 o'clock. They started breaking out through the lows and just punched it to the downside, hammering the sell side, just absolutely pounding the S&P and all of the index markets lower. But at around 1 o'clock, they just could not hang on to that low, and they've given quite a bit of it back already. So even though we do have a nice bear move, in the grand scheme of things, this is what the daily candle looks like. We have a bear candle with a small wick on the highs and a big wick on the bottom that really doesn't give us a whole lot to work with. So we have a very lackluster daily candle. And the one thing that does stand out, of course, is the fact that they just smash the lows so aggressively. They're very likely going to do the same thing up here and try to compensate that blow off on the bottom. Now, that doesn't mean that we can't sell. There definitely is a potential reason to sell, but we have to be careful in terms of where we're entering, mainly just due to the fact that where did the sellers go, right? Why couldn't they hold on to this low if they were so aggressive? What happened to them, right? Why did they leave the party so quickly? And why did they kind of leave everyone holding the bag who tried to stick with it? So we know that the sellers are probably trapped down here. Very likely sellers would even be trapped at the lowest close, maybe even a little bit lower, and they're going to be looking to try to get out. That said, really the sell move that I'm anticipating off of 24.6075 or 63.75 is a move back down to likely breach this little low that happened just underneath 51 3/4. This zone, this area, seems to be where the market found a lot of balance, and a retest of that area is likely going to find the rest of the sellers who are trapped down here. They're going to be able to sell further up and get out. And we also have buyers who are looking to buy at a retest of earlier market structure. So pretty big area of interest between 50 and 52, and likely that's kind of all I'm looking for the sell side on the S&P is off of 60.75 or 63.75 down to 52. So that's going to do it for the futures outlook. Now, in terms of the news tomorrow, we do have a couple things to work with. Now, tomorrow certainly isn't full of big news by any means, but tomorrow at 8:30 in the U.S. session, we have the trade balances for July, forecasted at a negative 44.6 billion. At 9:45, we have the market composite PMI for August. No forecast for that. Previous was 56. At 9:45 as well, we have the services PMI for August, forecasted at 56.8. At 10 o'clock, we have the ISM non-manufacturing employment for August. And then, of course, at 10 o'clock, we also have the ISM non-manufacturing PMI for August, which is the big number for tomorrow. And that's going to be at 55.4 as the forecast. We do have the beige book tomorrow at 1400, and tentatively, we also have the API weekly crude oil stock coming out tomorrow. Now, the thing that is, again, something to keep in mind, because Monday was a holiday, everything gets shifted off. So inventories for crude oil aren't tomorrow. They're going to be on Thursday. We're getting the API tomorrow. We'll be getting both natural gas and crude oil inventories on Thursday, and that's going to be an interesting one. Make sure not to lose sight of that one, because that's the one that we're going to get all of the information of the hurricane and what it's done to the crude oil and natural gas supplies. So it'll be a very interesting one, to say the least. Now, for those of you who are crypto traders or are just interested, make sure don't close the video. We've got another section going over the crypto markets next up. Now, the cryptos, like we were saying, an absolute fire sale over the holiday. We had a monster rally all the way up, and the psychological levels that all of these markets hit were big, right? We had Bitcoin cycling off of the $5,000 level. We had Ethereum cycling off of the near $100 level. We had Litecoin cycling off of the $80 to $100 level. We've got a lot of psychological resistance pushing back against the markets. Not to mention the fact that China banned ICOs. We've got a lot of stuff going on fundamentally, along with just a good pullback that we're seeing right now when it comes to the cryptos. Now, beautiful pullback, sub 4,000s. You can't really ask for a much better pullback, going from 5,000 basically all the way down to 4,000. Buying in at around that $4,000 mark and pushing back up makes a heck of a lot of sense, and it's already bounced up about $500. So the overall movement that we're seeing right now is very strong. There's a lot of volatility still. Don't count this out yet. The sellers may not be done trying to push these lows. We have a huge amount of bearishness that came in, and it doesn't look like they're necessarily done. They may have overshot a little bit, but with an overshoot in the bottom, we get an overshoot in the highs. They may make one more run down. If they do make a run down, I would love to buy sub 4,000s again. I would love to see, sub 3,900s if we can. Just kind of trapping that previous swing low. I would absolutely love to see that price. Now, again, we might not get it. It might not push all the way back down. The next intermediary level of support is going to be at 4,000, but 3,900 or lower could be a beautiful bounce if we get a little more bearishness here on Bitcoin. Overall, everything is pointing to the upside still. This little pullback isn't going to shut down this amount of bullishness. Definitely not. Not even close. We're just looking at this as a potential buying opportunity. Over on Bitcoin Cash, not really getting a whole lot done. We're still stagnating around the same area. We've been looking at the 4-hour chart just to give us something to work with, and even that, we're not really getting a whole lot. Again, the big area of interest here on Bitcoin Cash is going to be to those earlier structure levels of swing highs coming into play, swing lows coming into play, and that's going to be at around that 1,100 area. We still have yet to really tap the 1,100, and even with that big dive lower on Bitcoin, Bitcoin Cash remains unaffected. So it wouldn't be a surprise to see a quick snap down, tap that 1,100, maybe even lower, and then get the pop right back up again. So I am looking for a snap down to around 0.11 or lower to buy into for continuation to the upside. Over on Ethereum, a little bit bearish still. The major area of interest is going to be at around 66 to 67. These lows are huge levels of support, and every time the market dips down here, we have a rocket ship on our hands that just pushes right back, and we are right there again. Definitely looking for buying here to push the market back up, at least up to 85, if not up to 90s, or maybe even the full 0.1s. Either way, though, we are in a very long-term buying area where buyers can likely try to jump in and hang on for the next couple weeks, because we are anticipating some bullishness coming in here if they make one more push down to those lows. Over on Litecoin, Litecoin is probably the only one that really didn't pull back that far. We had a snapback, but really just to the moving average support where they haven't been able to break through it. Now, this also coincides with the earlier swing highs, major area of resistance. They finally, after front running it, they broke above it, came back and used that level as support. So sitting right around 155, if you want to cut it in half, is going to be the major area of support. So if we can get one more dip down, it doesn't look necessarily like the sellers may be done. I would like another test of these lows, and I would be very happy to buy right around there to shove the market back up towards new highs once again. Litecoin, out of all of them, seems to be about the strongest right now, but that doesn't necessarily mean it won't take its time. It is one of the slower of the markets, and something to kind of keep your eyes on. Overall, though, we are in a buy area here as well. I would like one more pullback, though, before I go jumping in too aggressively. And then over on Burst Coin, another one that is showing some pretty good momentum to the upside. Burst had a little bit of a hit earlier in the year, well, really in kind of late June, early July, and it fell all the way down to just above 100 before finding some buying support. And now we're pushing all the way back up to 300. Actually made it all the way up to around 360. We still have a lot of buy support coming in, and I mean, in reality, we have a big breakout point. They shoved right above that high. They pulled back, aggressively held the lows. Everything is looking absolutely beautiful for one more attempt at the highs. I would like to see another test of this support. I think right now we're a little too high up. I don't want to buy too far away. I want to still buy at a good price, and right now it's pretty expensive at 294. I would rather see a dip down to around 240s, maybe down to 230s even, so we can buy in at a better price and then shove the market back up towards those highs. That's going to do it for the cryptocurrencies and the outlook as a whole. Of course, we've got a lot of stuff going on, and the cryptocurrencies, really, I think all eyes are going to be on Bitcoin. What do they want to do? Are we going to get that big pullback and continue, that big correction up and then slam back down to the lows? Or is this just a pullback before we go rallying back up to the 5,000s? Either way, I would love a pullback one way or another. So that's going to do it for this one. If you found it useful, hopefully you did, make sure to smash that like button. Of course, if you have any questions, you can always send me an email, jbrink@slingshotfutures.com. Like we always say, for every market that we come to, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.